Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar. Dollar, dollar.
Hallo iedereen en welkom op mijn kanaal. Welcome to my channel, guys. And I hope you had a wonderful Friday. Let me just take a quick sip of this water so we can get into it. And as always, let's check what's going on in the world with Corona updates. And let's take a quick look. Oh, wow. So the USA has crossed the 500,000 confirmed cases. Spain 150,000, Italy. But if you look at the numbers, we can see that the confirmed cases are starting to, well, it's still pretty bad, but are starting to slow down already in the European countries, mainly those, those countries that were hit very hard: Spain, Italy, Germany, France. They were hit pretty hard, and it's actually starting to slow down a little bit. I just heard that Italy is going to extend their lockdown period until the 3rd of May, so another month. And until then, the whole economy is actually dropping dead and everything. And so people are very surprised. Why is, for example, the stock market going up? Well, a lot of people don't understand this, is that the economy is actually a lagging indicator. So usually what happens is it takes a while before the effects of the economy will show on the stock prices. So what happens now is, because we had such a huge major crash, there will always be people, and I'm sure a lot of financial advisors are telling you, like, hey, you should really think about buying some stocks here, because it's really cheap right now. I mean, come on, it dropped like 40%. So you should be buying some stocks. Well, in my opinion, and of course, this is not financial advice. I'm not a financial advisor. In my opinion, I think there will be a lot more pain and hurt coming, mainly because if the economy is in a lockdown, if nobody is going to work, if nobody is going to produce anything other than the stuff that is required for like medicine, basic needs, then of course why would that give a positive effect on the whole economy, right? So yeah, I still think we will need 2-3 more months at least to recover this. That doesn't mean that we're gonna create a lower low. We could make a lower low, but that does mean that we'll be ranging on the bearish side, on the lower end of our price range rather than the upper range. So I still don't think that this is yet a buying opportunity or a buying market. I still think this is more a market to be finding good shorting positions, and that's where we're at. So let's go quickly to yesterday. Yep, if I can find my mouse here. Okay, so yesterday I talked to you guys and I said, yeah, well, maybe let's go to the 4-hour chart. What I'm looking for is to close my shorting position at around 6,750. And as you can see, and told you guys that it would go down a little bit more. As you can see, perfect spot. It got hit here, right here at 6,750, right where we said that that's where we probably would see a small bounce. So that's amazing, right, guys? Sometimes technical analysis does work, apparently. Anyways, so I also said that most likely we'll be seeing a small bounce from this spot here, because we have so much support on this end. As you can see here, we have a lot of support here. And that's one of the reasons. And also, of course, we have this rising channel support. And right now the price is actually, it bounced up, retested this two important EMAs here that we've talked about as well, the EMA 55 and the EMA 200. And we actually had a fake bullish cross here. As you can see, the EMA 55 was trying to cross over the EMA 200, but immediately a couple of days after, you can see here we have a bearish cross. Maybe I can zoom it in a little bit more. Yep, okay, we have a bearish cross here immediately after, and that's definitely not a good sign for the market, right? So what happens now is really something that we cannot know. So we either can break this this line here and then go up a little bit more back to our previous support line, which is definitely a possibility. But what I always advise for people, and definitely people who are interested in day trading, do not overtrade. And definitely during the weekends, when the volume is so low, there's so many things that can be happening, like fake outs, like crazy stuff. So if I was you, this is just my personal advice. I don't trade during the weekends, and I make sure that I do analysis during the weekends, but I usually trade only during the weekdays, like a normal full-time job or a normal employed person. Let's put it like that. But anyways, so we got our targets reached here, and I think that's very important, and we got out of position. So now what we're doing is basically the whole weekend we just look and see what are the potential moves, right? So very, very, very easy to see. We got a bounce here, and some people might be thinking, yeah, well, why wouldn't you be longing if you got pretty sure that you would be, you know, that we will get a bounce there? Well, the reason is we don't know how far we're going to get that bounce, right? Let's say we bounce only here and then we break immediately this rising channel. It's just too risky. So whenever we are in a downward trend, and if you watched yesterday's videos, you can clearly see why I'm thinking that we're still in a macro bearish trend. That is because the monthly and the 2-day EMAs are still below the critical points. So we're still in a downtrend. And then what in all those situations, 80%, well, maybe 90% actually, of my trades will be shorting positions, and only like 10 to 20% will be longing positions, where I'm pretty sure that we will have a bounce, right? So that's basically how I'm trading, and that's basically where I feel that I have an edge. And since during the weekends there's lower volume, I feel as a technical analyst you have a lower edge, and that's one of the reasons why I just keep track of the market during the weekends. I still will follow up on everything, but I will most likely not do any trades at all. So we'll go back to Bitcoin a little bit later, but for now, as you can see, we have our bounce at our target. We're still holding this trend line, which is super important, of course, and I do think that we'll have a little bit higher for now, but it's still in a very critical point, and as you can see, right? But I'll give you my viewpoint a little bit later during the stream. So today I wanted to explain a very critical theory that is called the Wyckoff theory. And in the Wyckoff theories, you have two situations. You have the accumulation phase and you have the distribution phase. So maybe give you a quick example or explanation. Accumulation phase is obviously when the price is at a good price, as a low price, and people want to accumulate more Bitcoin. They want to harness more Bitcoin because they think on a later stage in the future they'll be able to sell it for a higher price. So price can still go up, of course, price can be going up, but the volume will steadily increase, and we will have accumulation, mostly sideways, but volume will increase. And then at one point, people will have enough Bitcoins, and then they will sell for profit. And that comes, then we enter a distribution phase. So distribution phase is when people already have enough Bitcoins, they feel that it's time to take profits, and they feel that in the near future, they have to sell now because the price is most likely going to be going down, like in this situation. So, of course, with how the market and our economy is ongoing, with all the fear that is in the market, of course, we had a very nice period. If we go back into our weekly chart, so we have a very a nice period here from around 25th of November until this period here, December. We had, as you can see, the price going mainly sideways and accumulate. right? So people are accumulating Bitcoin, and then price went up, as you can see. And then at one point we reached our peak, and then it comes to distribution phase, because people are just simply selling their profits and taking profits. And obviously the distribution a lot faster than we expected, because of the panic and in the market, because of all the issues that there's ongoing right now. So let me make I'll just make a brand new tab to make it very clear for you guys. On the 4-hour chart, let's close this RSI for now, and let's remove all of this, and even my EMAs. Let's just close it all down so you guys can clearly see. So this is the 4-hour chart, and I'll show you the week of distribution schematic. Let's see, show you here. So this is the week of, maybe I'll make it bigger. This is the week of distribution schedule, and basically what happens is, as you can see, price goes up, of course, because of the accumulation phase. People start to this is phase A, and then we have a sideways movement where the price doesn't move that much. Then we have a test of the resistance, and then we get a very, very big drop. So if we want to do that on this chart here, we can actually do exactly the same thing. Wait, maybe up. Can I put this next to each other? Yes, I think I can. There. Perfect. So what I've been looking at this pattern is when we were going up for a while, the past couple of weeks, I was like, wow, this looks really, really like a nice example of a distribution and not an accumulation, right? So let's just put our theory at test, and let's just make whatever we're seeing on the right hand side and the left hand side. So we can say that around here, this horizontal here, we have an important line. We have an important line here where we have our tops, and then on our support, we can say that this support is quite important, of course, and let's say this support is also very important. So if we start to dissect this a little bit more, we can make here, this would be our first phase, I think. Yeah, so let's put it here. So this would be our 1 second. Yeah, this would be our UT, where we test it. Then we have another phase here. So we went a little bit sideways, and then we pumped up here. This could be our test here, and this could be our UTUT here, or a possible UTUT. And then we can make here, after it's dropped down back to our support here, this could be our LPSI, PSY, right? LPSI there. And then, as you can see, if we would get another test to our bottom here around this phase here, that would be our second LPSY. Yes, out here. So basically this is the theory, and then we have, of course, another phase. Let's put it here, and then we have our lower low, and we basically come back to our where we started off. So eventually what I'm seeing is most likely is that we'll be going all the way down back to our previous where we started off, where we started running upwards, or our accumulation phase. So what I'm thinking is, most likely what will happen is we'll end up back here or even lower at the 5.8K for this particular phase, right? So if you were asking me, is this accumulation or distribution phase, I think the answer is pretty clear for Bitcoin. What I think right now is we are in a distribution phase, and we are most likely going to be testing lower, higher lows or lower lows actually. Clear. So I hope that's pretty clear. You don't really have to completely understand what all these abbreviations are. If you're interested in it, you can always go to stockcharts.com and then just type in distribution schematic week of events, and then you can read about it, what everything means. All right, so that's the distribution. I'll clear that for now. Boop. So if that's distribution, what does accumulation look like? Well, for accumulation, I would like to go back to our gold chart, and maybe I'll change this into a night mode because my eyes. First of all, I'll hide all these EMAs as well. There. There's EMAs, and then how can I make it? Okay, well, whatever. Doesn't really matter. So this is the accumulation schematic. Poof. Up. And then we can do exactly the same thing as we did for Bitcoin, as you can see here. Let's say this would be our first phase. This would be our this could be our AR. Wait, why is it? Didn't click it. AR. Wait, why is it text here? Okay. Oh, I get it. It's because it's white. Great. I'll delete it. Let's change the color into black. Then here. Okay. Huh, I can't even type it. Amazing. Okay. Something issue. Let me reload this chart. So let's remove this and this. Okay. Where were we? Okay, here. So this phase is most likely what is a perfect accumulation phase. Boom, boom, boom. Vertical line. Where are we? Here. Then the text. So this could be our AR right here at this point. This could be our ST right here. And then as you can see, price goes here until here, which is most likely our ST again, but in phase B. And then we can make a horizontal line. Oh no, that's most likely our spring actually. Sorry. Oh, this is our ST here, and then this would be our spring. There. This would be our spring, and oh yeah, maybe I should put some vertical lines as well. So this would be an important line here as a support, and this one here, and then our AR would be here, something like this. Oh. And here, something like this. So that would be our spring, and then obviously we go a little bit sideways and we test, boom, here. So as you can see, then we go LPS. I can write it out for you guys. LPS and SOS. LPS. Here we have an LPS, and then we have our SOS right here. There. And of course, as you can see, we go all the way back up to our previous highs. So that's for now. As you can see, gold went into an accumulation phase during this time. So if in March, if you were thinking about, if you saw this pattern working out, then you should have been buying gold, and I think that's basically what I wanted to say. So gold is in an accumulation phase, while Bitcoin is actually in a distribution phase. So the reason, of course, is because gold is currently working as a hedge against the stock market, while Bitcoin is actually very highly correlated with the stock market. So whenever the stock market seems to be going down, then Bitcoin is going down as well. So sorry to say that to all the Bitcoin lovers out there. Right now, Bitcoin is definitely not, sadly enough, not a hedge for our economy. So accumulation, distribution. I hope you learned a little bit more about that. And so I wanted to go back into Bitcoin because, as you know, there's no trading right now on the traditional market, so nothing much to say on the traditional market. I do still think that the traditional market has a tiny little bit of an opportunity to go up a little bit more, but we'll see on Monday when the markets are open again, and see if there's some opportunity there. Not too long, but once again to be shorting on a little bit on a higher position. But we'll see what happens on Monday when the markets are open. For now, let's go back to Bitcoin. So, as you can see here, we have a pretty nasty 2-day candle that is being formed right now. If this candle would break this previous low here, so this let's say 6.772, that would mean very bearish things for Bitcoin in the next upcoming days. So this is quite important. The candle has not closed yet, so we can't really say that what is going to happen, but the candle is obviously going to close tomorrow, and then we'll also have our weekly close. So let's go to our weekly chart here. This is our weekly chart, and I've input some interesting observations that I've made. As you can see here, if we do a Fibonacci retracement from the top here until the bottom here, we can see that we are actually here right now on we made a retracement, a bearish retracement back up to our golden pocket ratio. So right now we are being rejected right now. So what I'm looking at is if this weekly candle tomorrow on Sunday closes below the 7K, that would be very bad. And also that would mean that we have reached our, most likely reached our local top at 7,466 or something like that. Yeah, 7.5K range. And then the only thing that's going to happen is down. Right now, it's not sure yet that we're going down immediately. Now there's still a small chance that we make a reversal, not a reversal. We make a push up higher for a little bit higher. But that's one of the reasons why I'm not in a trade right now. The trade that you should have made was the short position a couple of days ago. That was actually the trade to be made. So right now, not in a trade, just waiting it out. But I will give you some probabilities where I do think that we have a lot of chance of hitting. So let's go back to our daily chart. Boom. So as you can see, we closed our daily candle today, this morning at 8 a.m. for me, above the yellow line on the daily, or that's the EMA 21, which is very important. So there's still a chance that as long as we hold this, if we don't close the daily below this EMA 21, there's still a chance that we have one more leg up. So what's going to happen is most likely, like I said yesterday, I told you we would most likely going to go down a little bit more towards the 6,750, then make a small bounce, and then I told you guys I don't know how high we will go, but we can go down